Okay, imagine this. Bitcoin, maybe hitting over $1 million a coin by, 2030?
Yeah, sounds pretty wild, doesn't it?
It really does. But that's kind of the picture painted in this recent analysis from ARK Investment Management.
That's right.
Welcome, everyone, to the Deep Dive. We're your shortcut to understanding the info that, well, really matters. And today, we're getting into ARK's Big Ideas 2025 report. Specifically, their pretty ambitious Bitcoin price targets for 2030.
Exactly. And we're not just, looking at the big numbers. We want to dig into how they got there, the assumptions behind it all. It's from their analysis.
Right.
So our mission today is really to understand the core ideas driving their different scenarios, the bear, base, and bull cases. What markets do they think are the key drivers? And maybe what could it all mean for you listening?
Makes sense.
But yeah, it's super important to say upfront, these are forecasts. There's always uncertainty when you're looking ahead.
Right.
Right.
Absolutely. Okay, so let's jump into those headline numbers then, because they definitely stood out. ARK suggesting for 2030, maybe around $300,000 in a bear case. Then a base case of like $710,000. And the bull case, well, that's the big one, almost $1.5 million per coin.
Yeah, staggering numbers.
How do you even start to build a model for something like that? Seems ambitious is maybe an understatement.
Well, what's interesting is how they build it up. They're looking at different ways Bitcoin might get adopted. The core idea is this concept of total addressable market contributions, or TAM.
TAM, okay.
Basically, yeah. They pick different markets where Bitcoin could gain some ground. Then they estimate how much money might flow from those markets into Bitcoin by 2030.
Okay. So it's like they're seeing Bitcoin potentially taking a slice of different pies and they're adding up those slices. Is there a formula or something they use?
Exactly like that. And yeah, the formula itself is actually pretty simple. The price target they calculate is the TAM for a specific use case,
right,
times their guess at the penetration rate for Bitcoin in that market.
Okay.
And then you divide all that by the Bitcoin supply they expect in 2030. They figure that'll be around 20.5 million Bitcoin.
Got it. TAM times penetration divided by supply. So what are these key markets, these pies, that they think are the biggest potential contributors?
So they break it down into 6 main areas. But the first 3, they see as let's call them primary contributors, like where the biggest immediate potential might be.
Okay, the big ones first.
Leading the way is institutional investment. And they mostly see this happening through, those spot Bitcoin ETFs that are now available.
Right, yeah, the ETFs. That definitely felt like a game changer, opening the doors for, bigger money.
For sure.
So what kind of market size are we talking about for these institutions, and how much do they think might actually flow into Bitcoin?
Well, to give you some scale, ARK figures the total global market portfolio, but excluding gold, could be around $200 trillion by 2030.
Wow, $200 trillion.
Yeah, that's based on about a 3% growth per year from where it was in 2024, roughly $169 trillion.
Okay.
Now, how much of that goes into Bitcoin? That's where the scenarios come in. Bear case, they assume 1% penetration.
Just 1%. Still sounds like a lot from $200 trillion.
It is, yeah. Base case is 2.5%, and the bull case goes up to 6.5%.
6.5%. How does that compare to, say, gold's share right now?
That's a great question. That 6.5% bull case, it's actually almost double the current share gold has in the global portfolio. Gold's around 3.6% now.
Whoa, okay, so that's a big shift they're projecting in the bull case. And how much does this institutional part contribute to their overall price targets?
Quite a bit, especially in the higher scenarios. For the bear case target, it's about 32.7%. Base case, it's 34.3%. But in that really optimistic bull case, it jumps to 43.4%.
So institutional money is the main engine in their most bullish view.
Definitely looks that way, yeah.
Okay, powerful stuff. What's the second primary area they looked at?
The second one is what they call digital gold. The idea that Bitcoin becomes a modern store of value, maybe even starts replacing traditional gold for some investors.
Yeah, we hear that comparison all the time. Bitcoin is digital gold. What's the market size potential there, according to ARK?
So for this, their TAM is basically just the 2024 market cap of actual gold, which was around $18 trillion.
$18 trillion. Right.
And interestingly, they don't actually assume gold's market cap grows by 2030.
Huh.
Their thinking seems to be that Bitcoin, because it's easier to divide, easier to send, those advantages, it'll directly compete for that store of value money, maybe even pull some away from gold.
Right. So what kind of market share are they thinking Bitcoin might capture from gold then?
Their assumptions here are pretty bold. Bear case, Bitcoin gets 20% of the gold market.
20%.
Base case, 40%. And the bull case, a whopping 60%.
60% of the gold market. Wow.
Yeah. And actually, this digital gold idea, it's the biggest contributor to their more, let's say, conservative price targets. It makes up 57.8% of the bear case price.
Over half.
And 48.6% of the base case. So it really shows they believe in that core value proposition of Bitcoin as, digital wealth storage.
Interesting.
In the bull case, it drops a bit to 35.5% because that's where the institutional money really takes over, like we said.
So it's like digital gold is key in the medium scenarios, but institutions drive the really high-end outcome.
Exactly. It's a kind of interesting dynamic they paint.
Yeah, it really is. Okay, what's the third primary contributor?
The third one is Bitcoin as a safe haven, specifically in emerging markets.
Ah, right. For people in countries maybe dealing with high inflation or unstable currencies.
Precisely. They're looking for protection, basically.
That makes a lot of sense. Bitcoin being borderless and, not controlled by any single government seems like a real plus there.
Yeah.
What's the potential market size? The TAM?
For this, they looked at the M2 money supply. The monetary base of emerging markets projected out to 2030, they estimate that could be around $68 trillion.
68 trillion. Another huge number.
Massive pool of capital, yeah.
And the penetration rates they assume there, are they similar?
A bit lower, actually. Bear case is just 0.5% penetration, base case is 2.5%, and the bull case is 6%.
Okay.
But what's interesting is even with those smaller percentages, because the overall market, that $68 trillion is so big,
Right.
it still makes a noticeable difference. It adds about 5.5% to the bear case price, 11.5% to the base, and 13.5% to the bull case. And ARK points out, the barriers to entry can be pretty low for individuals in these places. It gives them access to something completely outside their local currency system.
Yeah, I can see the appeal. Okay, so those are the big three. Institutions, digital gold, emerging markets. What about the secondary drivers? What else did they factor in, even if it's smaller?
Right, the secondary ones. There are three of those two. Nation-state treasuries, corporate treasuries, and then this growing area of Bitcoin on-chain financial services.
Okay, let's take nation states first. Like countries holding Bitcoin in their reserves.
Exactly. We've seen, El Salvador do it.
Right.
And the analysis mentions that U.S. executive order from March 6th, suggesting maybe even the U.S. is starting to think about digital assets strategically. Could that lead to reserve holdings down the line? Maybe.
Interesting thought. So what's the TAM for government reserves?
They estimate global treasury reserves, again excluding gold, could be around $15 trillion in 2030.
15 trillion. Okay.
But the penetration rates they use here are pretty conservative, or 0.5% bear, 2.5% base, and 7% bull.
So not expecting huge adoption there soon.
Seems that way. As a result, the impact on the overall price targets is pretty small, like 1.2% in the bear case, up to maybe 3.5% in the bull case.
So an interesting idea. Countries holding Bitcoin, but not really moving the needle much in ARK's main projections.
Not in a huge way, no.
Okay, what about corporations? Companies putting Bitcoin on their balance sheets, like MicroStrategy.
Yeah, exactly, that trend. Companies may be swapping some of their cash for Bitcoin. ARK notes that by the end of 2024, there are about 74 public companies holding something like $55 billion in Bitcoin combined. Their TAM projection for global corporate cash by 2030 is about $7 trillion.
$7 trillion.
And the penetration rates, 1% bear, 2.5% base, and a bit more optimistic, 10% in the bull case.
10% bull case for corporates.
Yeah, but again, similar to the nation states, the overall contribution to the price target is still quite small, between roughly 1.1% and 2.3%.
Okay. And the last secondary one, Bitcoin on-chain financial services. What's that all about?
This is basically all the stuff being built on top of Bitcoin or using Bitcoin in other crypto ecosystems. So think layer 2s like Lightning Network for faster payments.
Right, Lightning.
Or wrapped Bitcoin WPTC that lets you use Bitcoin and DeFi on platforms like Ethereum. Also side chains, restaking protocols, that whole ecosystem.
Okay, so the tech development happening around Bitcoin.
Exactly. The value locked in those kinds of services was around $35 billion back in 2024. ARK expects that to grow significantly.
Significantly.
They project compound annual growth rates, CAGR, over 6 years of 20% in the bear case, 40% in the base, and a pretty impressive 60% in the bull case.
60% growth per year. Wow.
Yeah, huge growth within that specific sector. But here's the twist. Despite that massive growth rate within on-chain finance, its actual contribution to the overall Bitcoin price targets they calculate is tiny. Like 1.7% to 1.9% across all scenarios.
Really?
Even with 50% growth, how come?
It just shows the sheer scale difference, I think. Even with fast growth, that $35 billion starting point and where it might get to is just dwarfed by the potential trillions flowing in from institutions or the digital gold market, you know?
Ah, okay. So important innovation, but maybe not the main price driver compared to just broad adoption.
That seems to be ARK's perspective in this model, yeah.
So it really sounds like the core story, according to ARK, is about big money adoption. Institutions coming in, people choosing Bitcoin over gold, maybe significant use in emerging markets.
That's pretty much the gist of their primary drivers, yes.
Now, you also mentioned something, an active Bitcoin supply model. That sounds different. What's the idea there?
Yeah, this was presented as a more, let's say, experimental take. It's a different way to think about the scarcity aspect.
Okay.
So instead of using the total estimated Bitcoin supply, like that 20.5 million number,
Right.
this model tries to estimate only the Bitcoin that's actually, liquid, available to be traded. It discounts coins that are probably lost forever or coins that haven't moved in a really, really long time, like they're locked away in cold storage, effectively vaulted.
Ah, okay. So it's trying to figure out the real available supply, not just the total mine supply.
Exactly. They use this metric called liveliness. Think of it as tracking how much Bitcoin is actively moving around on the blockchain versus just sitting still.
Liveliness.
Yeah, and they point out that this liveliness metric has been kind of stable, around 60% since way back in early 2018.
60%, so that implies.
It implies that roughly 40% of the total Bitcoin supply might be considered vaulted, hasn't moved in ages, likely held by long-term believers, or maybe even lost.
40% is a huge chunk potentially off the active market.
It is. So the thinking goes, if you have the same amount of demand coming in those same TAMs and penetration rates we talked about, but you divide it by a much smaller active supply, only 60% of the total.
Then the price calculation goes way up. Basic supply and demand.
Precisely. And when they run the numbers using this active supply assumption, the price targets jump significantly, about 40% higher than their main model.
40% higher. So what do those numbers look like?
Under this active supply model, the bear case goes from $300 to around $420,000, and the base case jumps from $710K to almost $1 million, roughly $990,000.
Wow. Nearly $1 million in the base case, just by adjusting the supply estimate. That's a huge difference. So why isn't that their main forecast? Why stick with the total supply model?
Well, the report is pretty clear that their official targets use the total supply. I think it's probably seen as a more conservative, maybe more standard approach.
Makes sense.
They present the active supply model more as like food for thought, an alternative view. But it really does highlight that scarcity factor, right? How much Bitcoin might not actually be available to buy, even if it technically exists.
Yeah, that vaulted supply concept is powerful. It emphasizes the HO dealer mentality, I guess.
Definitely. So it's an interesting lens, even if it's not their headline number.
Okay, this is all painting a very optimistic picture, potentially. But the analysis, it includes some serious warnings, too, doesn't it? Like, this isn't a sure thing.
Oh, absolutely. And they are very, very clear about this. It's critical to remember these are just forecasts. They can and probably will be revised. They are absolutely not investment advice.
Right. Standard disclaimer, but important here.
It's very important. These numbers come from hypothetical scenarios, models. There are tons of risks, tons of limitations.
What kind of specific uncertainties do they call out?
Well, they mention relying on data that might not be perfect. Data can be incomplete or just not fully verified.
Sure.
They also admit that a lot of their assumptions, especially about how quickly things get adopted, those penetration rates involve subjective judgment calls. There could be biases.
Right. Predicting the future is hard.
Exactly. And markets are unpredictable. Black swan events happen. Sentiment can shift on a dime. So they explicitly say, don't just rely on these forecasts to make decisions.
Okay.
And they state clearly that the actual price in 2030 could be very different and potentially much, much lower than even their bear case. Plus, all the usual risks with Bitcoin volatility, regulatory changes, tech issues. It's all still relevant.
Got it. So handle with extreme caution. These are interesting projections, but just projections. Okay, so just to kind of wrap our heads around this, ARK Invest has put out these, eye-popping potential price targets for Bitcoin in 2030, $300 K bear, $7 and $10 K base, up to a $5 member bull case.
Mm-hmm.
And it's all built on this idea of Bitcoin capturing shares of different markets.
Right.
The big ones being institutional money flowing in, Bitcoin acting as digital gold, and maybe significant adoption in emerging markets.
Those are the key pillars, yeah.
Then there are the smaller contributors, nations, corporations, on-chain finance, and this interesting twist with the active supply model, which pushes the potential prices even higher, though ARK treats that as more experimental.
Right. Highlights the scarcity.
And crucially, all of this comes wrapped in major caveats. These are just forecasts full of assumptions, risks, uncertainties, not investment advice. It's more like a framework for thinking about what could happen.
Exactly. It's not a prediction carved in stone, more like mapping out potential paths based on certain adoption trends.
Okay, so that leaves us, and you listening, with a big question, I think. We've heard about these potential futures for Bitcoin institutions, adopting it becoming digital gold, maybe helping people in emerging economies.
Yeah, a lot of different possibilities.
But we also know about all the hurdles and uncertainties. So thinking about all that, what scenario seems most, plausible to you? And maybe more importantly, what's the biggest blocker you see? What could stop Bitcoin from reaching these kinds of targets? Is it regulation? Is it the tech itself? Competition? Something else?
That's the million-dollar question, isn't it? Or maybe the $1.5 million question in this case.
Oh, maybe. Definitely something to mull over. Anyway, thanks for diving deep into this with us today.
My pleasure. Lots to think about.